One of the things that's jumping out to me, perhaps most notably with some of these headlines today, is this idea of adjusting or at least re-examining the framework for inflation. How would you expect that to play out?
Yeah, I don't expect it to play out. I mean, it's sort of interesting, right? The Fed goes through this exercise with some regularity over recent years in particular. So I think it's great that they talk about it and they talk about sort of the different paths that it could go down. But we don't think that this is something that will actually gain any traction in terms of seeing results of changing the process. But again, it's an exercise they seem to go through, sort of once a year or so.
Tom, could the Fed get much more dovish than it has done in recent months without the data getting suddenly much worse? In which case, of course, the outcome for markets would be a net negative rather than a positive.
Yeah, well, I think you just sort of nailed a really important point. I don't know how you become more dovish from here. In fact, if anything, I think what the minutes really drove home from the other day is that there's really more of a two-sided conversation going on within the Fed, right? I mean, if you were to just listen to Powell at either that January 4th speech or at the January presser, the FOMC presser, he really sounded much more, sort of dovish. I would even say sort of downright negative toward the backdrop. But the minutes, I think, really drove home that, that's not really the conversation that's happening sort of around the table. And I think Clarida's speech, sort of the next day, I think that was really important. And I think something that's being overlooked. He really drove home that the Fed didn't make any U-turn, that they actually still hold a relatively constructive view of the backdrop, and that this U-turn that I think most people keep on talking about is wrong. In fact, what the Fed basically did was they went from, sort of wanting to continue to raise rates just as simply pausing. So I think that, again, drives home an important idea that the market, from the Fed's perspective, is wrong for looking for cuts.
Let's bring in Krishna Guha from Evercore ISI, who's also able to join us now. Krishna, what's your take on the last couple of days, whether it was the Fed minutes or the testimony and comments we got today from the Fed? Was that already priced in, do you feel, to markets because of the amount we've talked about their pivot in recent weeks?
So I think a fair amount of it was priced in. Now, going into the Fed minutes, expectations were so max dovish that if you looked carefully, you could see some things that felt maybe just a tiny bit more hawkish relative to those super dovish expectations. The sense that they would obviously have to reconsider the word patient when and if they got clarity on these downside risks. But I don't think there's anything wrong with reading this Fed as one that intends to be very patient for some period of time, but also is starting to look at these longer range questions about how do we keep inflation expectations from drifting down in this kind of world with low inflation and a zero bound that binds on rates quite often. The tone today at this conference I've been attending from Fed officials was really quite focused on stopping inflation going too low.
Krishna, what happens if we get a trade deal with China or trade deals with some of our other partners like Europe that we are currently negotiating with as well? Rick Santelli's been on our air and he makes a key point. Say we do get some of these deals, it could really turbocharge the U.S. economy and with it, U.S. markets. What then in terms of policy for the Fed?
So you're absolutely right that if we get a sort of comprehensive resolution of trade and these policy uncertainties, that would be a real boost to the economy, would take away this cloud of uncertainty that's been paralyzing decision making here and abroad. But I think we need to be realistic. We're not going to get quick resolution, for instance, across the trade front. We may get good news on China followed by escalation of trade conflict with Europe, for instance. But suppose things do get better, then I think the question the Fed has to judge is, do we just start kicking in some more rate increases straight away? Or do we actually take a hard look at the inflation side here and say, look, inflation's still below our goal. We need to make sure we get back to 2% durably, finally finish the job. And that would provide some rationale for underreacting to better macro and market data.